Chief Operating Officer of Boyce Watkins Enterprises in the Black Business School. Also, one of the key members of putting together the Digital Underground. Thank you guys for joining us tonight. We have been having so many discussions regarding cryptocurrency and blockchain investing. And we're all over here in the Digital Underground making all this money with all the coins going, shooting up in price. But now we have a new problem. And that new problem is how do we deal with Uncle Sam, right? So, Uncle Sam definitely wants, his piece of the pie. And today we have Rebecca Samuels. We brought her back once again to talk about, the new tax codes, to talk about just general things regarding crypto investing and how to protect you, to make sure that you don't go to jail for tax evasion or tax fraud or anything like that, right? So she is with us today, and I'll let her just go ahead and introduce herself. So Rebecca, how are you doing tonight?
I'm doing great. Thank you for having me again. Tax season starts at the end of the month, January 29th. So I have a lot of clients contacting me now, not necessarily about Bitcoin, but obviously that too. So I'm actually kind of excited. As I previously stated, I started my business back in July of last year, and I've been filing taxes underneath another CPA working for his firm, and I decided to branch out on my own. So this is going to be my first tax season with all my software and everything, and it's really exciting. So thank you again for having me.
Congratulations on your first tax season.
Thanks.
Yeah, so there have been some changes in the marketplace. Can you talk about like this new tax law that was just passed by Congress, and what that actually means for people who are investing, really just in general first, and then after that, people who are investing in cryptocurrencies, like if that affects them at all?
Okay, so pretty loaded question, but so the new tax the new tax law doesn't really, you won't see it take effect until 2019. So it's starting now, January 1st. We have the 2 to 3% reduction in taxes across the board. Obviously, there's been a permanent tax for the corporate tax rate. It's now down to 21%. Exemptions are eliminated.
What was the corporate tax rate before?
We could go anywhere from 39 to about 50, depending on what the calculations were. So this is actually
So for corporations, it's a flat tax of 21% now?
Yeah, it's now down to that. I mean, there's other things that go into it because the calculations are never that easy, but definitely a lower corporate tax rate, and that just it's favorable for C Corps. There's the 20% reduction on pass-through for sole proprietors, partnerships, S Corps. There's obviously limits and specifics on that, but generally speaking, that's also new, which is very interesting. No exemptions, which if you are a family with a lot of children, that is going to hurt. The standard deductions are increased, they're doubled. Head of household is 18,000. So there's definitely a lot of different things that you will see in the upcoming tax year when you file your taxes in 2019. But for now, everything is still the same. So when you file this year for 2017, we're still operating under the old rules.
Interesting.
So,
okay.
Crypto space. This is actually pretty interesting because I guess we're just going to hop right into it, right?
Yeah, we can take one quick second. Did I hear that there's a one-time penalty-free thing for like the corporations to bring their money back to the United States, where they only have to pay 10% taxes or something like that?
I did not research that, so I can't speak on it, but I will definitely get back to you and let you know.
Okay, yeah, I just read an article where like Apple's thinking about bringing back all of their foreign assets and their foreign money back to the United States now, like $200-something billion. And the reason is because they only have to pay a one-time tax of 10%. So yeah. So anyway, that was just
now one thing I just want to jump in real quick before we get started. We're going to talk a little bit of stuff, but I think what's going to make this most relevant is we want to make this like an AMA Q&A type style, a Q&A style type discussion tonight. So for people who are in the webinar, which will be awesome, there is obviously there's a chat and there's also a Q&A panel. If you are chatting away and ask questions, there is no way we're going to be able to know what you're asking because there's just too much chat discussion going on. We're at close to, we got a couple hundred people on the webinar, so we just can't keep up. So if you have specific tax questions, ideally related around cryptocurrency and the new regulations and everything, we have a crypto person who also is a registered or a certified, and I'm screwing it all up, but Rebecca is a CPA and an EA. So like a CPA means you're smart, and EA means you're even better at this stuff. So we've got her here, and she's graciously going to be donating her time. So she's not going to give you personal tax advice,
yes,
but you're using the brain of somebody who does this stuff for a living and knows. So her response is invaluable. Sorry, go ahead, Lawrence.
Yeah, and one other thing that I'd like to mention, if we do not get your question tonight, I want to apologize in advance. A lot of times we have questions flying in on the Zoom webinar and everything like that. So if we don't get to your questions tonight, I definitely apologize to you. It's not because we're ignoring you or we don't care about what you have to say or anything like that. It's just that we have a lot of questions, and it will be impossible for us to get to all the questions that are sent in to us via Q&A. So I just wanted to say that up front. We love you guys, right? And we just definitely love you, but we can't get to all the questions. So I just wanted to make sure I put a disclaimer out there.
Okay, now I'm going to jump in and say that I am a CPA and enrolled agent, but I'm not your CPA. I'm not your enrolled agent. So please, this is general information. Take it to your tax professional, your tax preparer, your tax attorney, and see what applies to you. If you don't have one, obviously I am offering my services. But if you choose to, find someone closer that lives in your same state, that's your choice. Just please, this is general information. I'm not specifically answering tax questions related to one person because I don't want someone else to take that advice and say, well, Rebecca said I could do it.
Yeah, most definitely. So just go ahead and tell people how they can contact you too. So
sure.
Yeah.
The best way to contact me, I guess, is by email. So that is, you can go to my website, which is www.pythagus.com, spelled Pythagus. And all my contact information is there. I normally respond within 24 business hours. It just depends on how busy I am. And if you'd like to schedule a consultation, my consultations are free for the 15-minute consultations. If you require more time to talk about a more in-depth tax service, the consultations are paid. However, if we do business, the fee that you paid for your consultation will go towards your service, which will basically make your consultation free. So this is just because I've had a few people that have scheduled conferences with me, 30-minute conferences with me, and then they haven't shown up. So yeah. I just want to keep, make sure my time is being spent, especially as, I'm going to get busier as the tax season goes underway.
Excellent. So we got all that out the way. So if you guys want to contact Rebecca, you have her information. Then we can dive deep into tax stuff related to crypto. So you were saying, Rebecca, so tell us about taxes and crypto, please.
Okay. So yeah, just jumping right into it. I am hearing a lot, and a lot has been brought to my attention about Section 1031, which is the like-kind exchange loophole, which pretty much says if you are exchanging one thing for another thing of the same like kind, you can defer your tax gains until a later date. It's very favorable, say, in real estate. But what I've also noticed is that a lot of people have not really done their due diligence research on 1031. This is what it's called, Section 1031. Section 1031 requires a lot for it to even go down. So for example, the item needs to be picked out that you're exchanging. You need to go to a qualifying intermediary. The qualifying intermediary facilitates the exchange, and then the exchange is complete. Things need to be done in writing. It needs to be done ahead of time. And in my personal opinion, just following that, Section 1031 does not qualify for cryptos. And even though the IRS has not told us yay or nay, I suspect that in the future, they're probably going to go back and retroactivate it so that Section 1031 doesn't apply. So I hate to be the bearer of bad news. Again, you can speak to your own tax professional, discuss this issue with them if you do have concerns regarding the crypto gains. But I think anyone that's wishing to use 1031, I mean, you could use it if you want. It's a very long form. You got to fill it all out and everything else. And you have to do that for every single trade. So if you've done 200 trades, you have to fill out this form 200 times. But I really don't see too many tax professionals standing behind that. And this is just a major question that I'm constantly getting, whether it's online or people calling me directly. So Section 1031 is changing for 2018 going forward, that only like-kind exchange will be limited to real estate. So there'll be no more picking out art pieces and deciding that you want to now exchange it for another art piece and defer the gain. It's now being held strictly to real estate.
So Rebecca, why don't you maybe help me understand this? And I'm just going to ask a question because this is, I believe, a common thing that we all run into, right?
Yes.
So I want to buy, Ripple most recently has been the darling child. It's blown up. The founder of Ripple now is worth more than the Google guy, which, I mean, I think Ripple's a good coin. I don't know if I think it's worth that much, but hey,
it ain't that good yet, right?
I'm not going to argue because I have a decent position in Ripple and have made a lot of money. But from a tax perspective, okay, so I have my cash, I convert my fiat through Coinbase, so I buy like 10 grand worth of Bitcoin. That gives me what, 2/3 of a Bitcoin. And then I take my fiat from Coinbase and then hold on for 1 second. I got some. I take my Coinbase, I send it over to Binance or Bittrex. Those are the two exchanges I've been using. And I then convert my Bitcoin into Ripple. And now my Ripple's doing good. So that half a Bitcoin I threw in or 2/3 of the Bitcoin is probably worth like 4 Bitcoins right now. Life has been good. I don't think I have to pay taxes on that. Now, what you're saying is I do, and what do I pay out? Do you see what I mean? Let's talk this through, because from my perspective, I don't have any cash coming in. It's still in the exchanges. Heck, it's in Binance, which I don't know where the heck Binance is. I think they're out of Hong Kong or Japan. There's a Chinese company, right? So why do I care? But why? Or let me answer this question. Why should I care?
Okay, so let's walk through that, right? Because I actually had a client come into my office and sit down and talk with me about this very same thing. He bought Ether, and I do have permission to talk about this. I'm not saying his name and anything else like that, but he bought Ether, and he bought it back in like 2013 or something like that. So he has a lot of Ether. It wasn't worth much back then, so he bought a lot of it. Didn't know what was going on. He used some of that to make other alt buys, and now Ether's almost at $1,000, and he's sitting on a lot of it. He has 1.3 million. So he came into my office. We sat down, and I said, technically you're supposed to pay taxes on this once you converted the coin and realized the gain in a sense, and that's pretty much what you're talking about here. So you buy the 1 Bitcoin or 2/3 of Bitcoin, and it's worth $10,000. And you decide to use that to buy what you say, Ripple. But if the amount that you bought is more than when you're trading it, that's the taxable event. That's the gain. This is going to get very messy because we have a lot of people that are constantly doing trades. So there's a basis of what you bought and then the realized gain when you've converted it. Why should you care? Well, it's what you're supposed to report on your taxes. I've run into a couple of people that don't believe they should have to pay taxes, especially on something like crypto. So therefore, I'm not speaking to you because obviously you don't want to pay taxes. So my advice is no good to you. But for the individuals that do want to stay on the right side of the IRS, that want to pay their taxes, this is a taxable event. This gain should be reported in addition to all of your other gains, in addition to all of your other losses. At the end of the year, all of those are summed up and placed on your return. So, I mean, do you want to talk about tax evasion? I mean, if you buy Ripple and, you got in at 23 cents like I did, and somehow it blows up tomorrow, and now you're sitting on $1.3 million in Ripple, and you decide you want to cash out and take this money and use it. Well, it's going to be noticeable. Like, you don't just, $1 million just doesn't show up. It's not something that you can easily hide compared to like, oh, it only went to 24 cents and I have a very small gain. So again, you just don't want to be the person that the IRS is making the example out of when we're talking about these things like tax evasion and everything else, because the IRS is aware that people are not reporting their crypto gains. They're not paying taxes on their crypto gains. And they have, I read that they have a contract with a company called Chain Analysis, which is now trying to identify people that are not reporting this information so that they can go to them. And, it just.
Wow. That's actually a good point. So everyone thinking that, hey, my stuff's in Binance, I don't know. If they actually, you're right, because these guys, they will tie your wallet to your identity and it's on the ledger. They know everything about it. It's on the
ledger. Exactly. I mean, unless you're looking at a privacy coin that destroys the transaction after it's complete, Bitcoin is not anonymous. And this is something that I keep telling folks over and over again. Yes, your name and your address is probably not associated with you, but you have a wallet. It's tied to you. It goes back and forth. It's been pretty interesting because I have, before I even got involved in this, back in August when I started really looking into this, I found a person that was involved in crypto. And I just had a brief conversation with him and I said, well, how are you reporting your taxes? And he goes, well, I'm not paying taxes on this stuff. I have fake, I get prepaid cards to load my money on and this, that, and the third. And I was like, wow, are you serious? He was like, yeah, I dare the IRS to come after me. And I was like, I'm not going to play this catch me if you can game. Again, if you don't want to pay taxes on crypto, that is your choice. You know what the consequences could be. And if you choose a coin that just magically does well, and now you have 2.5 million in your wallet, you're going to want to cash out somehow, some way to get your funds. So I don't know what more to say.
So when do you pay the taxes then? So you will pay the taxes once you cash out.
Hey, Lawrence, I just want to interrupt really quick. Is that okay?
Yeah, go ahead, please.
Okay. So that's great point you made, Rebecca. And I just want everyone out there to just be cognizant. You've got two options, right? You pay your taxes or you invest in a privacy coin and transact everything there.
And now, I'm not telling you to invest in the privacy coin.
People do that. So like people are always asking, as an investor, we always want to skate to where the puck is going. And people who are in the digital underground may have noticed that in December, we've been talking big on privacy coins. And one of the reasons why is this tax thing is something
that's not my reason why, Charles. I don't know who you're talking about.
Well, but here's the thing, right? So if you're out there and you've made a bunch of money on crypto and you thought you were secure on Bitcoin, well, tell you what, Rebecca just told you not to. So go buy a bunch of privacy coins, because I've just made a big position on privacy coins. So move all your billions of Bitcoins into privacy coins, and then my privacy coin position will make a lot of money, and I win that way too. So get out there, buy those privacy coins, and let my positions go up. So sorry about that. Aside, Lawrence, you had a question. Why don't you ask?
Well, no, I wanted to reiterate. So basically, you pay taxes when you convert back to U.S. fiat currency, or when do you actually realize those gains?
So you realize the gains upon the conversion of the coin. So if you go from Bitcoin to Litecoin and your Bitcoin amount is appreciated, that's a realized gain. At that point, even though you don't have the fiat cash, you're supposed to pay taxes. You've realized the gain from selling the Bitcoin to acquire the Litecoin or what have you. So another question that keeps coming up, we're going to go through a lot of questions I keep getting tonight. When do I pay the tax? All at once on April 15th? My answer to that is no. Technically, you're supposed to be making estimated quarterly payments. Obviously, this is a little bit difficult because, you may not have paid anything in the first quarter because nothing happened. So I would say as long as you pay it as soon as possible, once you've realized the gains, do whatever calculations you need to. And it's really, I don't want to say it's difficult, but we also have to keep in mind, there are times where you're going to realize a loss. So for example, for those that may have bought Bitcoin in December when it was 19,000, well, if they cashed out now, it's 13,000. They're realizing a loss on whatever they put in. And those net losses eat your net gain. So at the end of the day, we don't know exactly what it's going to be until the tax year is finished, the calendar year is finished, and you gather up all your numbers and you figure it out. But I would say the best bet is if especially if you have a major gain that you've realized, if you bought Bitcoin at 100 and when you converted it to either fiat cash or to another altcoin and it's now $1,000, there's a gain there. And you want to just be cognizant that, all right, I'm going to have to pay taxes on this, especially if that's the only transaction you've completed.
Okay, so let's maybe make a little more clarity. And let's
Yes.
an example. So I'm going to share my screen and let's do some arithmetic. Specifically, I'm going to map out some trades I made, and you tell me, let's talk about, because I think taxable gain is a pretty amorphous concept that is hard for at least me to conceptualize.
Yes.
So for me, it's all about numbers, right? So let's
Yes.
just run through some numbers. And these are completely fictitious, but we're going to use nice round numbers for examples.
Perfect.
So let's use the example of Ripple, right? So on Coinbase, I convert $10,000 of fiat into, say, 1 Bitcoin.
Okay.
And that was in, on November 15th.
Okay. And this is not a taxable event. This is just simply buying the coin into buying the coin.
Yeah. Well, you will define I'm telling you what I'm doing.
Yes.
You will say, uh-oh, or not a problem, right?
Okay.
So I've done this, and I bought a Bitcoin for $10,000 back in November 15th. Then I transfer my 1 Bitcoin from Coinbase to, let's say, Binance.
Okay.
On November 16th.
You're good.
Now, let's say between November 16th to November 20th, 1 Bitcoin goes from $10,000 to $15,000. There's a massive run up on Bitcoin.
Okay. So far, you're still good. Because even though the assets appreciated, you're still good.
Okay. So then on November 21st, I convert my 1 Bitcoin, which is now worth $15,000, into Ripple, which let's say it's 20 cents. At 20 cents a coin. So that, if I were to do some math, which I can't do, is a lot of coins.
Okay, that is now a taxable event right there.
Of XRPs. Okay, so what am I taxed on here?
You are taxed on the difference between your basis, which is 10,000, that's the cost, and what you've now converted it for 15,000. So it's $5,000 is your taxable event.
$5,000 is my taxable event. Now, in this case, what is my tax rate? And I know that's a loaded question. This would not fall under short-term. This would fall under short-term then, right?
Yes, this would fall under short-term gains, and your short-term gains follow your ordinary tax rate. So if you are normally within a 25% bracket, then the short-term gain would be taxed at 25%.
Oh, so this is ordinary. Wait, so this is actually ordinary income.
No, it's taxed at the ordinary tax rate. It's not ordinary income. This is a short-term capital gain.
Okay, so now does that increase my ordinary income? Let's say, so like hypothetically speaking, I don't know the income rates, but like I know ordinary income, if I make 40 grand a year, that's, let's say 15%. If I make 100,000 a year, or let's say if it was like this, I make 40 grand a year, it's 15%. If I make 50 grand a year, it's 20. And if I make 60 grand a year, it's 25%. And these are not, this is purely for subjective numbers. And
So if you were making $40,000 a year, your short-term capital gains would be taxed at the 15%. It'd be 15%.
So does that also increase? So like, let's say I am making $48,000 a year per year, and my ordinary income tax rate is 15%. So now, if I do the crypto gain, does that increase my ordinary income from 48,000 to 53 and jump up my tax rate to 20%? Or am I still at 48,000 a year and paying?
Oh, I see exactly what you're saying.
Tax rate. Do you see what I mean?
Gotcha. I see what you're saying. Let's actually come back to that.
Okay. Because that's the big question, right? Because I could actually, hypothetically, I'd want to be a poor person.
Yeah, and just have a whole bunch of short-term gains.
I made a ton.
Gotcha.
I'm happy paying 15% on short-term gains. You see what I mean? If
yes.
I'm like, oh yeah, I'm making 30 grand a year, life sucks, but my Bitcoin portfolio has gone up $2 million. I mean, that'd be great. Okay, so we know the short-term side is this. So then what happens, and this is something I'm guilty of, I'm not really a trader, but I do know like basic 101 technical analysis. And in my case, whenever there's like a big run-up, generally speaking, there's always profit taking at the end of a run-up that can dip to anywhere from 15 to 30%. So usually when I see like a new high get hit, I will actually liquidate 30% of my position and then set a stop loss about 25% underneath in case there's a quick dip before it jumps back up. Now, the other side, though, too, is I look at that as reallocation money. So sometimes I miss those dips and I just put them into other alts that, to like even out my portfolio. Like that's just something I do. But what you're saying then is every time I do that, I actually need to track that trade because I'm going in and out to try to that worked. Like sometimes it works and sometimes it didn't. Like, for example, I was running Steam and, Steam went up and it's dropped and it's went up and it's dropped. And every time that happens, I increase my Steam portfolio, larger and larger and larger. I basically add, 30% more coins on 20%, at every dip. But what you're saying is each of those transactions now I have to track, and that because those are all taxable events.
Yes. And also, you also want to know what is your basis for those coins, because when you eventually convert them back to fiat, that's going to determine your net gain or your net loss.
So now what if I just want to be stupid and say at the end of the year, like I understand like all this little trading stuff and I have to like track it all, and it just makes my head hurt. And I'm not saying I don't want to pay my taxes, but I don't really want to track every trade. And let's say if I just said, on January, my portfolio was worth $50,000. On December, the thing's worth 200 grand. And I just pay on taxes of 150 grand. Can I just do something like that? Or do I actually have to break down every little trade?
So I remember you asked this question the last time, and I ran this through a couple of tax preparers, because while the idea sounds good, I just felt like there was something missing in that. And one thing that we need to keep in mind is that your fees add to your basis. So every time you do a transaction and it goes from somewhere else, from one wallet to another, those fees add on to your basis, which then change your basis. So I don't necessarily think, my personal opinion, I understand that's very complicated in someone that's a day trader, right? I understand that. But I don't think the best way is to summarize it like that, because we're not really talking about all of the trades that happen in between, the fees. We're not sure exactly what happened, but I totally get what you're saying. And I did run this by a couple of other people, because I was like, that's a very interesting idea if we could just summarize it. But I just think that's oversimplifying something that isn't simple to begin with. So
I guess from my perspective, I look at this as an optimization problem, right? Like maybe I'll give up 3% in basis because of extra fees, but I save myself like pages and pages of accounting work, which also you guys don't work for free, right? So if I look at this, it's like, the accountant is charging me what, $50 an hour, $100 an hour, or whatever the heck it is, versus okay, they can get it done in 10 minutes by just saying we had this number and that's that. My like optimization algorithm for like finding all those trading fees and stuff like that, like it just makes my head hurt, and I just don't want to deal with it.
I totally understand. So something that I have been telling potential clients that have contacted me, there is cointracking.info that I'm actually playing with right now that reads the API from your wallets. It imports your CSV files, your comma separated value files, and it will do the work for you. Now, I'm playing with this myself so that I can master it for my own portfolio, because I have about 15 or so coins, and I've done some trading myself just following the recommendations from Jarvis. So I need help too. And I'm using that to keep me straight. And I also have my backup documentation. Like I said, I totally understand where you're coming from. If a potential client wants to do it this way, like I tell them all the time, it's your choice. If this is what you want to do, this is your choice, just as long as at the end of the day, if you're audited, you can back it up and say, yes, this is how I came to this figure. Here's my documentation. I'm fine with that. I mean, I'm not going to harp that every single transaction should be calculated and figured out. But also at the same time, I'm just a very complete person when it comes to that. So I
totally get your perspective. I mean, you are dotting every T and crossing every I. That's what makes you a good accountant. And I'm just hitting the high spots, which, doesn't make me a good accountant. It's a good reason why I'm not an accountant.
Right. So I guess a couple of things. One, some people in the chat did not know what a short-term capital gain was. So what's the difference between a short-term capital gain and a long-term capital gain?
Okay, so a short-term capital gain is any investment that's held less than 1 year. And long-term capital gains is anything held over the year. So day traders or people that are constantly trading, they would fall under the short-term category. If you buy Bitcoin on January 1st and you hold it until January 1st of the next year, that would be long-term. If you buy Bitcoin on January 1st and you hold it until August 1st, that's short-term.
Got you. Okay. and they're taxed completely differently. So one is taxed at your income rate, while the other one's taxed at 15%, if I remember correctly. Is that correct?
So I actually took a look at the new rates. They're changing, obviously, because the new tax law is changing, but that won't be in effect until next year. But currently, it's a max of 20%. It starts at 0 if you're in the bottom bracket at 10%, and then it increases from there.
Well, so this is interesting.
What's the new law then? Do you know?
Oh, the new law, they broke up the long-term capital gains into 3 brackets. So it's 0, 15, and 20.
0, 15, and 20. Okay.
I mean, but just to jump back in, you just made me realize something. I mean, with how ordinary income works, you said the corporate tax rate under the new law is like a flat 21%.
Yes.
I probably want to convert into a corporation. Because like my personal tax rate, if I make like 300 grand a year or whatever, I've had years where I've paid some pretty significant tax rates, and that sucks. So like, it seems like it's actually better for me to create like an LLC or a corporation to actually hold all my Bitcoin holdings, because I can do whatever the heck I want, and then I'm paying 21%. Instead of if I hold it myself, I might pay like 40% or something like that if I, take a big position on stuff, that's crazy.
Corey Best to say he did the math, and it's worse if you're a corporation. However, Corey, are you doing the math based off of the current tax rate or the new tax rate that's going to be implemented next year? So, So that's what you probably look at too.
So going back to the business, because that's also another question I keep getting a lot. Now, it doesn't state anywhere that you can't create a business. As a professional, I am not advising anyone to create a business. Why? There's compliance issues. Just in my personal experience of working for business owners, I've noticed that the accounting isn't up to par. So I can imagine that someone would say, I'm going to create an LLC for crypto. And then they do nothing else. It's, I trade. Oh, let me write off my lights. Let me write off my internet. Let me write off my computer. And at the end, you're done. And you now want to get this tax return. I do not see the benefit. And I said this before, and I'm going to say it again. I do not see the benefit in creating a business for the sole purpose of investing in crypto unless you are substantially involved in this activity, meaning that you're doing this constantly. You're the equivalent of a day trader. This is your job. This is how you generate income for yourself.
But even if it's not, I guess, and I don't mean, well, I guess I do mean to interrupt you. I don't mean to be rude, I guess. But like, I was talking to a buddy of mine. He took on 1 million Lumens coins basically a month ago at about 9 cents.
Gotcha.
And right now, Lumens is sitting at like 80 cents, right? So this guy he's making a lot of money.
Yes.
And if he just cashed that out,
we do the short-term capital gains.
That's like 300 grand that he made on like a trade.
Mm-hmm.
So at that point, if I make 300 grand, my personal tax rate's going to be about 35% or something.
39, or higher.
Whatever that number is, this, right? 39%. Heck, to set up an LLC and to pay an accountant or whatever to arb that down to 21, that's 18% I can save by just throwing that into a company.
And then we have now the costs of compliance. We have the accounting. I mean, we have the costs to set it up. I mean,
but that's like $5,000.
That's not gonna.
Let's say it's $5,000, and for $5,000 I can get a company set up. I can get a really nice accountant. I'm sure you'll help me out and stuff like that. If I say take care of it for me, like literally, if I have 1 million Lumen coins, and I've gone from 8 cents to 80 cents on my position, I don't want to pay 39%.
Okay, I hear you, and I understand what you're saying. So I'll say this. How about this? There are times I will advocate for a person to open up a business, an S corp, to go ahead and make their investments through, right? But I'm speaking for the general
public,
people, not the person that just bought a whole bunch of Stella and now it's $1 million. And not only that, in addition, the business would have had to have been set up by the end of last tax year for you to take advantage of it now. In addition, the 21% corporate tax rate doesn't take place until next year. So this is what I'm not saying that people should or shouldn't. I'm saying if you were my client, I wouldn't advise it. But at the end of the day, it's your choice. And
so
I'm going to do what you say.
Just listening to this, I think I have a plan now, right? So first, go ahead and get all the things set up in order for some type of corporation, right? To be prepared for when this new tax stuff actually happens. And then you just have to be a whale like Charles's friend and buy a whole bunch of Stellar Lumens and hope for a 10x return.
Well, but Lawrence, I don't know if you see this, but like everyone who's in our group, we've been killing it. I mean, it's not like Stella's the only one. I mean, Tron just freaking blew up on us. I mean, it's ludicrous. I mean, we're all making money, and that's great.
Yeah. So basically, get prepared. I mean, I think that's what I'm hearing is get prepared for this new tax stuff because you're either going to win or you're not. When it comes to like being able to take advantage of some things that.
And at the end of the day, I was just saying, at the end of the day, too, you also want to know what's required because something that I keep seeing people throw around is I'm going to create an S Corp. A lot of people don't know that an S Corp is supposed to have a board of directors. You're supposed to have an annual meeting. You're supposed to have books. And it's like, again, we're trying to make a business without really understanding what goes into it. That's why I'm saying for the general public, I would not advise everyone to go out and file for a business tomorrow. Really understand what you're doing or tax plan. This is something that a lot of people do not do with their tax preparer. Every single year, when I was working underneath the last CPA, after we did the tax returns, our clients would come in and we would have a sit down talk with them. This is what your taxes is this year. This is what your refund is this year. Let's see how we could lower your taxes next year, or let's see how we can invest your refund. That was one of the things that we did. And I get it. If you're buying something and it blows up tomorrow, you're going to want to cash out right away and realize the profits. I totally understand that. At that point, too, you should always have your accountant on deck, your tax professional on deck, your attorney on deck to be ready for this.
So here's another random question, I guess. I've been getting pitched by Puerto Rico lately. I don't know if you're aware, but Puerto Rico has this law that if you're there, you don't have to pay federal income. You just have to be there 51% of the time, and then you don't have to pay federal income taxes. So that's kind of like the whole expat thing. And I don't know if this falls under you or not, Lawrence, but
forget Colombia, forget Medellin. Let's go to Puerto Rico.
I'm serious. I mean, it's and you have to be there 51% of the time. So, maybe we all need to go if the lumens position blows up, you go buy a house in Puerto Rico.
Oh, you know what? You just gave me an idea, Charles. We have the whole real estate launch coming up. So for you guys out there, we have a new real estate class taught by Dr. Vanessa Dutra. And she teaches about how to buy personal real estate, and then she'll get into more in terms of how to make it in terms of actual business. But we'll have a future launch coming up, and one of the big dreams of me and Boyce is to one day create our own city, to create our own neighborhoods and that type of thing around the world. So maybe Puerto Rico is a good place for that, Charles.
They're begging you now because they've just gotten flattened by the hurricane. So
unfortunately,
if you can imagine, real estate, if you get a house in Puerto Rico and you can save on your taxes, literally, and I'm not an expert, but I remember talking to someone and there's rules and stuff you got to follow, but you basically don't pay federal income tax if you live in Puerto Rico, a certain amount of time. So if you think about it, if you had 1 million lumens and it blew up on you, you
take
can
that
get a place in Puerto Rico for free. As
trade that in for a real estate holding in Puerto Rico, and then see, you're thinking just like a robber baron, Charles. Good for you.
This is the thing about it. I completely agree with all ways that you can find to avoid tax. So, tax avoidance is legal. Tax evasion is not. And
the tax evasion gets you like this.
Yeah, exactly. But if you sit down and create the plan and use the tax laws to your advantage, and you can support everything. If you get audited, I'm about to sit in with a client that is about to be audited. you want to make sure you just have all your documentation. Everything is dotted. All the T's are crossed and the I's are dotted, and you're fine.
You know, it's funny. I just had someone private message me. I guess I have some friends that are taking advantage of the Puerto Rico thing. That basically you just have to live there 6 months and a day in Puerto Rico. So I think, you know, Lawrence, maybe you're going to be looking at Puerto Rico instead of Medellin.
I know. I just love it here so much, but maybe it's worth it.
Federal taxes is worth something, man.
Right. So that's interesting. Okay. So we're here with Rebecca Samuels, Uber CPA. What's the other thing? EA? What is it called?
Enrolled agent. So enrolled
agent
is just an exam strictly specific to federal taxation that I also had to take. So a lot of people ask me, why'd you do both? And it was because I wanted to double down on the tax knowledge, especially going into this area. I just felt that it was important for me to do that. So that's it.
So my mom would love you because you've got like more degrees. Like my family, like they all have PhDs and stuff like that, and they just kind of like shake their head when they look at me.
Yeah, but then you're like showing them your crypto portfolio, and they're like, "Oh, okay, that makes up for it."
You and your bachelor's degree, Charles.
It's just different, you know, because this is just how they are. They're just like, we don't care.
So someone asked Hart asked, and we answered this question so far. Do you have to claim gains that are still on the exchange that you have not withdrawn?
Yes, unfortunately. And like I said earlier, I have a client that we're sitting down and he's about to make a $40,000 cash payment to the federal government because he needs to do that before January 15th for it to count. Otherwise, there's the underpayment penalties and all this other stuff. But yes, you're supposed to.
So this is a follow-up question because you said you're sitting down with your client. Mm-hmm. Curtis Ramsey asked, what do you need when going to file your taxes dealing with like coins?
Great question. So the clients I've had so far, they've actually brought me their portfolios. They brought me their Excel spreadsheets. We sit down and we talk about everything. They show me their calculation. I would say the more the better. If you have any documentation that was given to you from any of your wallets exchanges that you still have stored in your email, bring that. Just bring whatever you have that could make things simpler. Obviously, you want to go to someone that understands crypto because otherwise they're going to be looking at you like you're speaking a foreign language. So, you know, there's I'm in a group of tax professionals that are dealing in cryptocurrency. They have their own businesses, you know, and obviously I'm accepting clients as my first year being open. But to answer your question, the more the better. The more documents you have, any calculations you've done, anything you have that could help, the better. And again, cointracking.info. They do have software where you're able to upload your files, do some calculations for you. You might have to go through some things line by line just to make sure it's being picked up correctly. But otherwise than that, that's something that you can use as well.
Hey, Lawrence, I just want to butt in for one quick sec. I actually have to run. I'm going to sign off, but I see there's a lot of questions, and I recommend that both you and Rebecca stay on that. So, you know, logistically speaking, you know, you're now host of the meeting. You can do everything, and I'm going to sign off. So great, everyone. Great catching up with everyone.
Nice talking to you.
Yeah, always a pleasure. And I'm sure we'll sync up again in the near future. Talk to you guys later.
All right. Talk to you later, Charles. All right. So a lot of people keep asking, they're all over the nation and all over the world, right? But they're U.S. citizens, it seems like. They want to know if they can actually work with you since, you know, they don't. Where are you located, Rebecca?
I'm located in Maryland, and I have a client portal that's set up. Yeah, so I have a client portal that's set up. I've actually had a couple of potential clients contact me, you know, over in Afghanistan, actually. and we're talking about working together. Some of them have uploaded documents. So I have a client portal that I do all of my business through for people that aren't local. They upload their documents to me on the client portal. I get to pull them off. It's secure. And that's how I work. And that's the same way how I send their tax return to them once it's completed. And then I also let them know the status of their tax returns when it's done. But
Gotcha.
Otherwise than that, if anyone's in the local area, I do have an official like office space, and I take clients there. Otherwise, we can also do everything remote, which is my preference, because I could be at home at 11 o'clock at night doing a tax return and not having to, get up and go to an office.
No, exactly. No, and we're a remote company, so we definitely understand that as well. So tax law, comparing and contrast taxes for crypto versus taxes for stocks. Are they treated the same? Are they treated differently, or what?
Taxes for crypto. Well, crypto is considered as property. Stocks, is the same way. You buy a stock or you invest in an IPO, and then until you cash out, the long-term, short-term capital gains. So yeah, more or less it's the same. But I definitely want to make that distinction that cryptocurrency is not stock, it's property. And the IRS posted, a 6-page memorandum of basic crypto questions and their responses. What is cryptocurrency? How is it taxed? What if I do this and this and that? So anyone could take a look at it. It's called, I believe it's IRS Notice 2014-21. And again, it just states their position. That's the only guidance we have to date. I expect now that, it's been going on for a while, a lot more people are getting involved. I definitely expect some more guidance, hopefully within the end of this year, hopefully. But that's another thing too. I went to a CFTC meeting yesterday, which is a commodities trading. It was like a meeting for outsiders to come and talk about this sort of thing. And I don't think a lot of people really understand how much the government is involved in crypto. Their employees are in the space trying to learn about it just as much as we are. And it was very interesting to me because there's attorneys, there's lawyers, and, and they're giving updates regarding what their thoughts are and the processes that they're going through. And it's just really interesting because they're heavily involved as much as we are. And you just don't know who these people are. Somebody could be working for the IRS and they also have a huge portfolio that was, paid for with government money. Like, it's really interesting.
Interesting. That is very interesting. And speaking of the government and, the IRS, Cameron Marion wants to know, what's the penalty for not reporting? Is it an exact percent, or is it like a flat fee? Or is it jail?
Not reporting your crypto?
Yeah, or is it jail? Which one is it?
Well, we have there are different penalties, whereas if you underestimate your earnings, there is a huge penalty for that. I don't actually know the dollar amounts or the percentage amounts, so I'm sorry. That's something I could research for future discussions. But there is if you don't report, there is a penalty for that. If you don't file your taxes, there is a penalty for that. All of the interest, the fines, and again, we're talking about dollar amounts too, because while I don't think the IRS is going to go after somebody for not reporting $5 in gains, we just don't know when we're buying a coin, which coin is going to be the next Stella, and especially if you have a lot of it, right? Mm-hmm. So your dollar amount could just simply make you a target. And I think that's something that people really want to know. Like, this is serious. And I'm not sure, I don't know if too many folks get that, but this is serious because you can have your life, like my client said, you can have your life changed overnight. He was, doing fine. He makes 6 figures on his own by himself. And then he invested in Ether years ago, been sitting on it this whole entire time. And now all of a sudden he has $1.3 million just sitting in coins that he's now going to cash out. This is serious. And if you find yourself with that much amount of money, you should definitely have a team of attorneys, of accountants, of, I mean, gosh, any type of advising consultant that you need to make sure that you're managing your money right, and make sure that no one's coming to take it from you, and so that you can keep as much of it as you can, of course, because obviously these people cost, but you know.
Right. Can't forget the cost of the consultants.
Yes,
but if it helps you save a lot of money, because you can, lower your tax rate, or you don't end up in a precarious position with the powers that be, then it's still worth it.
And like I tell people all the time, like investing in the problem ahead of time avoids the problem costing 3 times as much later to fix. So this is something that you just want to, again, I had someone call me up yesterday, and I just let him know, you might want to sit down and speak to an attorney. Just have one on, not on retainer, not put any money down, but just have one identified that understands crypto, that you could sit here and say, hey, look, I'm having these issues. How is it that you're able to help, or what can you do? You want someone that really understands this, because it's still new. We're still learning, but that's not going to stop the IRS from going after someone. That's not going to stop. I was just reading the other day that a lady was accused of funding for terrorism using crypto, and they went after her. So it's not going to stop the government from coming after you if there is something that they think you're doing, or if the dollar amount catches their eye or whatever. So just be aware of that.
Yeah, and Jason over here is trying not to get in trouble. He's still having some challenges understanding like the realization of gains. So this is Jason Ingerman. The actualization element. The value of the coins are not accessible and will remain in holding for a long time. So like, when are the gains? Why can't we pay taxes when the gains are actually like realized?
Gotcha. So according to the IRS, the gains are realized when the coin switches from one version to another, when it converts to a different coin. But something I'll throw out there at you, because again, I get this question a lot. Why can't it just be taxed when it gets back to fiat? Just as an investor, because I invest in coins too, right? If I'm sitting up here trying to figure out a way to avoid taxes, I'm just never going to convert my money back to fiat. I will take all of my gains and use my BitPay card and use up, buy whatever I need. There's a lot more merchants that are now accepting Bitcoin. I mean, my company accepts Bitcoin. There's a lot of merchants that are accepting Bitcoin, altcoins. If I'm trying to avoid taxes, I just won't ever convert. If I bought Bitcoin at $100 and now it's worth $13,000, I will keep using my BitPay card and never pay taxes. So that's something that I think a lot of people really need to understand, that I guess this is now the loophole, right? That it's like, okay, how are we going to shut this loophole down? Well, once you convert from one coin to another, and I completely agree with you, because I invest as well, and one of my coins aren't doing so well right now, but because I converted Bitcoin to buy this coin, I've realized something and I have to pay a taxable gain on it. But that's just something that I think people, again, should be aware of. People aren't going to play by the rules. So if you give everyone this easy rule where it's, okay, we're going to realize that when it cashes back out to currency, I'm not going to convert it back to fiat. I'll just use my gains under my BitPay card and go on about my life, and I won't ever have to worry about this. But something else too, Bitcoin, cryptocurrencies, they're not currency. They're not what the IRS is considered currency. So we're operating under rules that was in existence before crypto came in. If you had property before and you sold it, you disposed of it, at that time, you would either recognize a loss or a gain. Cryptocurrency is just so different because all these coins are still coins, but they all do different things, and they're for different companies, and they operate on different areas of the blockchain. So it's very interesting because it is the same, but again, it's not.
Right. No, I got you. Yeah, it's so new. So really the IRS doesn't even know where
Exactly. And they're learning. I'm telling you right now, I've worked for the government for a couple of years, not under the IRS, but I've done like some auditing and stuff for them. And I'm very sure that they have people in this space that are trying to learn as much as they can and bringing this information back so that a game plan can be developed.
Right. So if we talk about the exchanges, Alicia, for instance, mentions that Coinbase says that if you have less than $20,000 in currency exchange, then you don't need to report it. I don't know if that's true or not. I don't know if you have any insight into that.
No, that's not true. Okay, so we live under what's called like a voluntary reporting system. So we're supposed to voluntarily report. That's why people don't necessarily get caught with certain things, because how is the IRS going to know, right? But we're supposed to voluntarily report our income and pay taxes on it and everything else under the U.S. Code Title 26. That's all of the taxation laws and everything else right there. You're supposed to report and pay taxes on all of your income. Now, Coinbase is turning over information for individuals with $20,000 or more under that subpoena, but that doesn't negate your responsibility to report. It doesn't negate your responsibility to pay taxes. Now, again, I don't know what the IRS is going to do. I'm not the IRS, but I don't necessarily think they're going to go after somebody for $5 of not, reporting $5 in gain. But we're also talking about a space where you can buy a lot of one coin one day, and the next day it will be worth $1 million, and you want to cash out. So it's your choice, as long as you know what the rules are, play the game.
Right. And Cleo, we'll get back to your question. We've covered it, but we know this is brand new for many of you. And we'll cover it again in terms of when gains are actually realized and that type of thing. Rashad asks, this might be more of a personal question, Rashad, and you might want to reach out to Rebecca personally, but what if I have whole life insurance? Will I be able to cancel out my gains and avoid taxes? Yeah,
that'll probably be a specific question.
Yeah, that's very specific. So I don't think we can answer that tonight. So Cleo says, and we're gonna just go over this one more time, right? So Cleo says, Rebecca, please make it plain. What are the taxable crypto events? Is buying Bitcoin, Ethereum, or any altcoin taxable? If you convert Bitcoin to XRP, so Ripple, for example, is it taxable or taxable only when you take the gains? Possibly. So let's just take that then. All right. So yeah, what are the taxable crypto events? Is buying Bitcoin, Ethereum, or any altcoin taxable?
No, but simply buying the coin is not taxable. I'm talking about the first time you do it. So you go onto Coinbase, you buy the coin, that's not taxable. Now you transfer the coin from one wallet to another, not taxable, because the coin is still in its form. It's still Bitcoin or whatever you bought. It's still in its form. You'll probably have some fees that you need to calculate in there, but it's still in its form, right? You use that coin to buy another coin, possibly taxable. What that hinges on is your basis for the original coin. So if it's $1,000, that's what you bought the Bitcoin for. You have $1,000 of Bitcoin. You moved it over to Bittrex. It's still $1,000. But a couple of days later, it's now $1,500. And you use that $1,500 to buy another coin, Ripple. That right there is the taxable event. There's a gain. The gain has to be there first, and using the gain is what is going to make it a taxable event. I know this is a very complicated, I'm trying to really get it as simply as possible, but it's
Yeah, I'm curious though, how would you pay the gain, right? So if you transfer from Bitcoin to Ripple, right, is it paid in fiat? Is it paid in, I'm going to send you some Ripple? Like, what is it?
The IRS does not accept anything except cash right now. And again, rules predate cryptocurrency. So if you had artwork And well, under artwork, you could have done like kind exchange before. But if you had one item, if you had one piece of property and you decided to use that piece of property to buy another piece of property, no money is being exchanged. Your property is worth more than the property you're receiving or whatever. Again, there is a realized gain that would have happened at that transaction, even though no money has crossed hands. You see what I mean? So again, this predates crypto. These rules weren't invented for cryptocurrency. This has always been in existence. It's just now it's really coming more into play because a lot more people are getting involved in cryptocurrency. A lot of money is being made in cryptocurrency. A lot of people are not reporting and paying their taxes in cryptocurrency. That's why it's a problem. And that's I went to that meeting yesterday, and that's actually what one of the guys there said. As long as everyone plays nice, the government doesn't get involved. But the second that, little old ladies are losing their money or whatever you call it, that's when the government says, okay, we need to regulate this because obviously everybody's not playing nice, so we need rules. This is exactly what the guy said last night. And I said, well, yeah, this makes sense. The IRS did not have this on their radar until someone made a big stink about it. Now it's like, okay, guys, we need to start focusing on this. Look what's going on. No one's reporting. No one's playing by the rules,
Right. So, and we've been talking a lot about gains. Let's talk about losses a little bit.
Sure.
So, Leonard McNeil wants to know, can he write off his losses? So let's say he converted Bitcoin to Ripple for a loss. Is that a write-off?
That is, again, we would take all of the situation that, all of the transactions that happened during the year. But if you have a net loss, you're able to deduct up to $3,000 in net loss that tax year, and then you can carry your loss forward. So that is possible. I think it's kind of unfair that they only let you write off $3,000.
Oh, they want all your gains. But
they want all your gains, but no, you guys this law a little bit. Yeah, I don't know. Yeah, but again, I'm not the IRS. I have nothing to do with them. I'm just a CPA that is following the rules,
Right.
And also, too, something else I want to throw out there, because this is a question that I'm getting a lot. So with the new tax law, casualty losses will now only be limited to so if you were to have a loss, if someone came in your house and stole something, you could have written that off as a casualty loss. Obviously there's calculations and rules behind it, but you could have taken that deduction off of your tax return. In 2018, that loss is now strictly limited to natural disasters. So unfortunately, they've taken that off the table. That's awful. But we do have an issue where people will get hacked, or people may destroy their private keys somehow if they have a paper wallet or they never remember it again or something of the sort. And they won't get access to their coins. They won't get access to their money. I've gone through the casualty loss. I thought that could have been an idea. It seems the only way now for loss purposes, and of course you need the documentation, you need to prove what actually happened to claim it and everything else. But it seems that, again, if you get hacked, it's possible that you're able to take the write-off on that as a loss versus as a casualty loss. That's not going to happen, and I'm not sure it could have happened before. But this is another area that I believe the IRS definitely needs to clarify for crypto space, because this is unique to this area that we have, it's technology, there's hacking involved. What happens, if you lose your money via hacking, the bank will replace it or whatever have you, but this is an unregulated space. So this is actually very interesting to me. And that's something that people may want to just keep an ear out for. You never want to get hacked. Secure your keys, your private keys, hold your private keys if you can. If not, secure your accounts on your different wallets as much as you can. But also at the same time, it happens. It really does.
Right. Yeah, I had a friend that was just hacked for about $10,000 in Bitcoin, I think. So, he's doing all right though. He's still good.
Okay. Lose $10,000. He must be doing very well because
yeah,
he's
still he's still doing all right. Yeah, don't even worry about him. But make sure you protect your keys. And we talked about that in the DU quite a bit. So we're running out of time actually for tonight. This is a perfect segue into you. So Angela Green asks, how would you suggest figuring all of this stuff out?
Well, number one, do what you can on your own. It just makes the actual cost, at least in my personal opinion, very inexpensive, or at least less expensive. So keep all your documentation. Use websites like cointracking.info and try to convert your gains for your tax preparer. Don't know how busy I'm going to be. I've had a lot of phone calls, but as of right now, I think I maybe had about 3 people really confirm. But you can always contact me. My website is www.pythagus.com. That's spelled Pythagus. And definitely email. I have a free 15-minute consultation. If you need more time than that, I do charge for that. However, any fees for my consultation will go towards your service if you decide to do business with me. So, I think that's a win when you get your consultation for free. And if you don't decide to do business with me, I'm pretty sure my time is going to be valuable to you that you'd want to pay for it anyway. And that's pretty much about it. I will be doing this as often as you guys invite me to. I really enjoy it. This is
the audience loves it too.
And crypto. I'm a crypto investor myself. So this is a space that it's like I could just put the two together and really do something here. So I'm excited about it going forward.
Right. So Rebecca definitely eats her own dog food, as they say in the world of marketing, or the old world of marketing of the 1950s, I guess. But
never heard that.
Oh yeah, they say it all the time in business school. Eat your own dog food, whatever. But so two things. So one more time, give the name of that tracking site, and then give the name of your website, please.
Oh, okay. So there is cointracking.info, and it's spelled just like that, cointracking.info. And there is another one. I'm still kind of going through it. I'm not really sure of it right now, but it's bitcoin.tax. But cointracking.info has been highly revered by my peers, which is why I'm even throwing it out there. I'm going through it right now myself with my own personal transactions so that I can be very fluent to help others that will start going through it. And my website, you said?
Yes, correct.
Okay, my website is www.pythagus.com. That's spelled Pythagus. A very unusual name, but I'm hoping that it becomes like the next Exxon or something like that. I don't know.
Okay. Yeah, I love it. So, Rebecca, thank you so much for your time tonight. And thanks to everyone in the digital underground who was participating in this discussion. Thanks for you all who were viewing on Facebook as well, who were participating. So we love you guys at the Black Business School. If you want to sign up for a class, head over to theblackbusinessschool.com. That is theblackbusinessschool.com. If you want to sign up for our Digital Underground group and all that it entails in terms of the on and popping Facebook page called the Digital Underground.
It is. I'm in it.
Yeah. And Jarvis. So Rebecca follows Jarvis's recommendations, he said a little earlier. And then also Lamar Wilson's class in terms of crypto investing 101. If you just still need to get started. So head over to bitcoin.theblackbusinessschool.com/go. That is bitcoin.theblackbusinessschool.com/go. And go ahead and sign up for the DU. We have a nice little community that's forming over there. We have quite a few great things that are in the works and that we'll be sharing with them soon. But if you're not in the group, sorry, we can't really talk about it. But other than that, I'm Lawrence Watkins, President and Chief Operating Officer of the Black Business School and Boyce Watkins Enterprises, here with Rebecca Samuel, accounting extraordinaire, CPA and EA as well, who knows a lot about this crypto. It's on the cutting edge of the accounting and the crypto space. So please, send business her way, consult with her. And thanks for your time tonight, and I'll talk to you again soon. All right, bye-bye.